Hey everyone, Ian King here, editor at Smart Profits Daily with your weekly market insights video. Joining me today, my friend and colleague, Mike Carr. Mike, what's happening out there? Any plans for Labor Day?
We have no plans at all, Ian, just a quiet holiday weekend here. How about you?
Oh, that sounds nice. We're probably on the same page there. We might go to the beach for a little bit this weekend. But let's talk about the market right now, because a lot of the folks out there are wondering what's going to happen with the election coming up. But before we answer that question, I want you to remind you to please like and subscribe to our channel. Any comments, or if you want to tell us what you're doing this Labor Day weekend, feel free to leave a comment below. Of course, keep it PG. And Mike, my question for you is, the election's coming up in 2 months. This is a period of seasonally high volatility. What should investors expect for the rest of the year?
I think investors should expect to react to the market that we see. Now, historically, September is the worst month of the year. We're in the weakest 6-week period. There's a very high likelihood of a decline between now and mid-October. But remember, there's been a very high likelihood of a pullback for the past month, and we never saw it. So we need to trade what we see rather than what we expect.
You know, that's a great point, because let's talk about this for a minute, because everyone is out there calling a top, right? Everybody says the economy is still in shambles and there's 11% unemployment. And it's like the market just keeps going up and up every day. I mean, I was looking at the forward price earnings multiple of Apple, for instance. It's trading at 35 times earnings. And I'm not even going to mention where stocks like Amazon and Netflix are, but my point is that these tops are more of a process. It's not like you can point to one day and say, okay, that's the top. We're going to have a sequence of these kind of sell-offs and failed bounces, which happen over and over again, because the dip buying behavior is probably the strongest I think I've seen over the last decade. What are your thoughts on that, with these dip buyers coming in every single time the market's down?
We are seeing dip buyers every single day, but like you mentioned, Apple's PE ratio. Ben Bernanke raised one of the greatest points ever in history a few years ago when he said if interest rates are negative or zero, it pays to level the Rocky Mountains, because the amount of fuel that you're going to save more than offsets the cost of borrowing money to level the mountain field. So it's really hard to put a valuation on Apple or Tesla if interest rates are zero. And that's where we are.
It sure seems like that. But let's talk about the election this year. And I want to bring up this chart with our viewers. We went back and looked at every election cycle between 2000 and current. And the returns here are the period between September 1st and the end of the year. So kind of what we're looking at right now. If you go back to 2000, we saw a 13% drop in the market. 2004 election was a 9.8% rise. 2008 election was a 29% drop. 2012, not much going on, 1.4% rise. And 2016, a 3.1% rise. Mike, what do you make of these election cycles? Is this just anecdotal evidence? Is this going to tell us anything about what to expect?
I think it tells us everything about what to expect. In 2016, that whole game came after Election Day, as we started that tremendous rally. Prior to that, stocks were down. The others all followed the same pattern of the preceding couple of months. If stocks are up, the incumbent tends to win. If stocks are down, the incumbent tends to lose, and that jumps out in that chart. 2000, 2008, the party in the White House changed hands. And I think when stocks are down, it means consumer sentiment is negative, and that's what we see in the election results. It's not between Biden and Trump as much as they want us to believe it is. It's about the economy.
That's so true. And of course, the market really looking kind of in the future, not really worried about what the economy is doing currently. And, you know, you bring up a good point. Really, in 2000 and 2008, we were entering or the middle of a recession at the time. And those were the big change elections. And it's interesting to see, because the market, you're right, is probably will dictate the election. So if the market has a big sell-off, you know, down 20 or 30%, in the next couple of months, we could see the Democrats take not control of just the presidency, but also the Senate and keep the House. So it's really going to be something to watch over the next couple of months. I mean, I know I've got my popcorn ready for this, and so what do you predict though? Do you have any prediction that could possibly happen? What do we think we could see in November?
I think it largely at this year is going to come down to just the couple weeks before the election. And so my research on this whole election stuff has been kind of outside of the mainstream. And what I find is that the trend in gas prices in early October sets the trend in the stock market later in the month, and that's consumer sentiment. When you're driving around, there's over 200,000 big signs in the country telling you the price of gasoline. If it's up, you feel bad. If it's down, you feel a little bit better. And that's what I think we're going to see this year. We want to watch gasoline leading stocks. That's going to forecast the election. Right now, if the election were held today, both candidates have locked up 47%. It's that 6% in the middle they're fighting for. And that 6% will vote their pocketbook the day they vote.
Yeah, it's a really interesting metric, Mike. I had never thought of that. Of course, in future elections, we can't really use the price of gas because everybody's going to be driving Teslas, right?
I forgot about that, but there'll still be a few driving old cars. You'll still have those signs up.
Okay. But also, I don't know if any of the gas stations around you play this sleight of hand trick where they post a price that's cash only, and you go and you pay with credit cards, and it's like 50 cents more per gallon than their posted price, but they didn't tell you that because nobody wants to go inside and pay with cash anymore. Anyway, who does that? So
they also post the lowest grade gas, and no car accepts the low grade gas anymore. So yeah, we have the same problem.
So this is going to be something really interesting to track. And I think at future market insight webinars, we should bring up the price of gas and show how the trend has been. I'm sure as the economy starts to reopen a little bit, you'll start to see gas prices go up slightly. I imagine that would be the case this fall with a lot of pent-up demand. People wanted to go somewhere.
I expect to see the same thing, but there's also a lot of excess capacity out there. So it's going to be a question of, does that pent-up demand use up all the supply? And that's what the election comes down to.
All right, there you have it. Mike Carr predicts the winner of this election will be determined by the price of gasoline throughout the fall. I want to thank everyone for joining us this week. Any questions or any topic you want to see us discuss, please hit us up in the comments. On behalf of myself and my colleague, Mike Carr, thank you for joining us this week, and we'll talk to you next week. Have a great Labor Day holiday and stay safe out there. Thanks again.